market news now. U.S. stock futures are lower as investors remain on edge ahead of a jobs report after recent data signaled economic resilience and reinforced expectations of higher rates for a longer period and pushed yields to multi-year highs. The U.S. Labor Department's closely watched employment report is due at 2:30 South African time and could lead the Federal Reserve to resume raising rates in this month after a pause in June, as signaled by the U.S. Central Bank and Jerome Powell, who is the Fed chair. To talk to us about the week that was and also talk about the latest when it comes to our markets, we are joined by Warwick Lucas, who is from Galileo Securities. Warwick, thank you so much for your time. Your sense of market sentiment right now, especially when you look at the Rand breaching 19 Rand to the dollar yesterday. It's holding steady, but what do you make of the events around it?
Well, yes, indeed. It has been a little bit weak. I mean, we did have a short-term recovery in the Rand, and that's fizzled out and started weakening again. And normally you would find that the market would follow through, enjoying a weaker Rand and strengthen. But I think looking at the sectoral performances seems to indicate a little bit of concern about the state of the consumer and prospects for ongoing monetary tightness and supply-side constraints in the country. So the bear's still a little bit there, but not rampant.
So let's talk about those monetary policy decisions, whether you're looking at the Reserve Bank or the Fed. But let's start off with the Fed. What's your base case for the July meeting? Is reality sinking in that we actually might get not just 25 basis points at this meeting, but possibly another 25 before we close out the year?
Quite possibly. I mean, in the US, we saw in private sector employment an unexpected rise of about 497,000, which indicates some tightness in the labor market. And the services PMI was quite firm as well. And I mean, in the June meeting, a lot of the Fed members were quite keen to hike, but passed it over. So I think coming forward, we now have a situation. We're also seeing bond rates rising quite firmly across the board in the States, which seems to indicate quite a firm belief that the Fed's likely to hike at least a further 25 basis points. Now, even though, I mean, the inflation does seem to be rolling over, I think we might wind up that the Fed actually threatens more than it acts for the second half of 2023, but that's fine by me.
That's quite interesting because the conversation, at least for the past week, I've been asking analysts whether they are concerned of a possibility of a policy error, given that you have these central banks that are trying to fight inflation, yet at the same time, you don't want to kill growth and you also want to balance financial market stability.
Yeah, absolutely. I mean, look, central bank policy error is always a risk. I mean, we've seen Powell warning that he thought rates might need to rise a further 2 hikes to restrict inflation, and he thought that inflation would only reach 2% in 2025. But then he also commented that he thought a risk of recession was diminishing. Now that takes us to quite an interesting point, because if indeed inflation is tamed without triggering a technical recession, might actually be the first time we've seen the Fed genuinely pull off a so-called soft landing. How's that possible? Well, maybe more advanced modeling and statistical techniques could be the reason.
So I mentioned in my intro that later we are expecting the U.S. jobs report. What are your expectations, good or bad?
Okay, so I think we're possibly looking at around about 225,000 jobs there. I think what's quite interesting in terms of this labor cycle is, despite a little bit of caution on the part of business and so on, they haven't been doing what US business traditionally does when rates are tight, namely they lay off a lot of labor. I think this time, because job markets are so tight, they're actually hanging on there. They're keeping their workers, and I mean, that record employment level, i.e. only unemployment of 3.5%, is persisting.
All right, Warwick, let's leave it there. Thank you so much for your time. That is Warwick Lucas, who is from Galileo Securities.